And to the U.S., the stock index futures, they pointed to a mixed open today after the S&P 500 and NASDAQ closed at record highs. Traders will be looking at fresh data while digesting news that U.S. President Donald Trump has revealed classified information to Russian authorities. On the data front, Tuesday will see the release of housing starts and building permits figures for April at 8:30 Eastern Time, as well as the Republican of April's industrial production numbers at 9:15 a.m. Eastern Time. In Asia, markets were mostly higher in today's trade following the bounce in oil prices after the energy ministers of Russia and Saudi Arabia announced output cuts should be extended till March 2018, and as investors largely shrugged off U.S. political news on President Donald Trump. The Nikkei 225 gained 0.25%. The Kospi finished the session 0.2%. Australia's ASX rose 0.21%. Greater Chinese markets were mixed. The benchmark Hang Seng Index was down 0.16%. The Shanghai Composite closed higher by 0.62%, and the Shenzhen Composite surged 2.061%. And oil prices rose today, extending gains after a joint announcement by top producers Saudi Arabia and Russia to push for an extension of supply cuts until the end of March 2008 gained traction. Brent crude futures were at $52.08 per barrel in early trade, up 26 cents from their last close. U.S. West Texas Intermediate crude futures were at $49.10 a barrel, up 25 cents. Let's bring in Adim Okwesa, research analyst with Financial Derivatives Company here in Lagos, for more discussions on this. Good afternoon, Adim. Thank you very much for joining us.
Good afternoon, Jim.
Now, Adim, is it just about the push by Saudi Arabia and Russia for an extension of supply cuts that is driving the oil markets this time around, or is there more to it?
Well, I think this push is mostly the reason why prices have gained substantially this week. After weeks of speculation of whether the deal will be extended, will Russia participate, these two major producers categorically made a statement saying that they would extend the production deal. I think that has really boosted confidence among the market and investors too. I've seen hedge fund managers taking long positions in expectations of higher oil prices. So I think that's the major reason why oil prices are higher this week.
Now, there are concerns that the 12 remaining OPEC members and other producers participating in the cuts may not agree to the extension during a meeting that should be May 25. Do you also share same concern?
No, quite frankly, I don't. My reason being the fact that Saudi and Russia are two of the three largest oil producers in the world. Saudi Arabia is essentially the de facto leader of OPEC. And in every oligopoly, which is what OPEC is, there's a price leader or a player which is always more influential. And whatever price or action the price leader takes, the others will follow. However, even if the other producers agree, I think what they can do is not fully comply to the production deal. And if that happens, Saudi Arabia will have to bear the brunt and cut even more production.
All right, let's bring back this trend in the global oil markets back home here in Nigeria. We have seen the 2017 budget, and of course just today the National Bureau of Statistics released its latest inflation figure. That's for April. Put all of this together, looking at the development in the oil market.
Well, if you look at inflation came down marginally, like you said earlier in your segment. I think one thing we have to look at is that there's insufficient. I think the market expected the inflation number to come down lower than it was. I think one thing that was lacking was that there's insufficient output growth to force prices down. The hope is that once the budget has been passed, the hope is that the budget will be assented to promptly. Once that happens, we should see funds being disbursed, capital expenditure being spent, and what this will do is that it will stimulate activity, which should also foster output growth, and we should see prices trend down lower. And if we combine higher oil prices, lower inflation, and hopefully the budget being assented to properly, It means that the Nigerian economy is in a better footing, much better footing than it was in the previous quarter. And it also reinforces the expectations that 2017 will also be a much better year than 2016. We'll get out of this recession.
Quite optimistic. Thank you very much, Adim, for your time. Adim Okwesa, research analyst with Financial Derivatives Company. We'll take a quick break. We'll be back in a moment.